Master, because that's what we really want to know. The markets are in an interesting stage, and a veteran investor in India, Jeff Chaudhary, Senior Emerging Market Fund Manager at LGM, is joining us. In his previous avatars, he has been, of course, watching India for the last 20 years, if I'm not mistaken. My first interview with Jeff was in, I think, 1996. Well, good morning to you, Jeff. Thank you very much for joining us this morning. Well, for the past 2 months, the FII money has started trickling back into Indian indices. And you can see the Indian indices have spiked in the past 8 weeks. Is this just a short oil long India or a short commodity emerging markets long India trade that is playing?
Most of what you said is right. You've got to add one more thing, which is a short China trade. I mean, as you know, obviously China has been going through a lot of turmoil in the last 2 or 3 months, particularly with the domestic share market. I'm very bearish on China, as you know. People who've been listening to me for a while know that I'm very bearish on China. And I think for emerging market investors, in terms of looking for opportunities around the world, outside of China, there aren't many. You don't go to Brazil, you don't go to Russia, you do go to India, and you go to places like Philippines and Indonesia.
Hi Jeff, morning. So you said you do go to India. Will you buy India at the current prices as well? Are valuations worrying you at all?
I never worry about valuations on the market because I think the market is made up of some very good companies which are expensive and very cheap companies which are very poor. I must admit, from our personal experience, as you know, I've been investing in India for 20 years now, I'd much rather buy quality, and I'm prepared to pay up for that. You know, the mistakes that I've ever made in my career have been buying cheap stocks. And I don't do that anymore. I prefer to buy expensive stocks which are good quality. And so, no, the valuation for the overall market doesn't worry me as long as I can keep investing in good quality companies for the long term.
Okay, point taken. Before I start talking about specific stocks, what have you made of the economy? Do you think it is turning for the better at all?
I think it's a sort of, you know, with India it's always a mixed picture. I think from an external perspective, there is obviously a couple of positive things. One is the fact, obviously, the oil price is excellent news for the current account, and good news for the economy. So that's important. Obviously, the monsoon hasn't been too bad this year, which obviously is good. And I think generally inflation and interest rates, even though we might have a few hiccups, is on a downward path. So all those are good things. I think the not so good things is obviously, there's still issues in terms of bureaucrats and politicians getting the results through. Obviously, we would welcome the GST being passed as soon as possible, and more infrastructure spending. But they're the old age of India. It's 2 steps forward and 1 step back. I wish it would be different.
Okay, we wish it would be different as well. But having said that, the Parliament has been hampered from working. But would you say some progress has been made on the land bill and on the GST front?
Yeah, I think happy is probably the wrong word. But I think progress. I mean, I think, with India, all of us who know India very, very well is, to use the adage, Rome was never built in a day. And I think with India, if you're moving in the right direction and there's some progress and compromise. Remember, you see, India's not China. I mean, I make this point a lot. If the Chinese authorities want to spend $200 billion to support the stock market, they switch a button. India can't do that. It's just not possible. And I think one of the downsides or upsides, if you want, depends on which way you look at it, of having a democracy is you have to build consensus, you have to move things slowly, and sometimes the tortoise actually does win against the hare.
All right, let's hope this time it does. Now let me come to specific stocks, IT companies, Jeff. TCS came in actually below street estimates, while Infy did better than estimates. So now would you prefer Infy? Would you buy it in place of TCS, which I think you hold?
Before I talk about the IT sector, let me just give you a little bit of a story, because I think it sort of brings into context the IT sector today. 2 or 3 years ago, I was talking about being bullish long-term for the pharmaceutical sector. And people were saying to me at the time, don't do that, because the outlook, particularly for America and generics, etc., was poor, and they were going through a period of very disappointing earnings. But we loaded up at that point in time in the pharmaceutical sector because we thought the long-term trend of generics, outsourcing, and India's competitive advantage will continue. We feel exactly the same way on the IT sector. You know, as you know, and you know, this is a disclosable fact, we've been shareholders of TCS for many, many years. Yes, the near-term outlook doesn't look particularly exciting, but frankly, you know, TCS, in our opinion, has a real competitive advantage. And the competitive advantage they've got, apart from the fact that it's a very, very well-run company, is the fact that eventually, you know, most of the business in the IT sector will eventually come to Indian companies. Now, it could be TCS, it could be Infosys, it could be Wipro, etc. I'm afraid the Americans are losing competitive advantage. Now, they will tell you, you know, people like Accenture and all these other people will say, actually, you know, we're as competitive as the Indians, but they're not. I mean, that's the simple reason they're not. And so I like the sector very much. I continue to like TCS for the long term, although the recent earnings wasn't brilliant. In fact, the recent quarters haven't been brilliant. But when I believe in a company for the long term, it genuinely means that. It doesn't mean 5 months, it means 5 to 10 years. Now, Infosys, you touched upon, is a slightly different story. Obviously, as you know, they've had a number of problems in the last few years, not least of which management turmoil. For me, Infosys is a show-me story. I need to see a year or two where Infosys comes back on track for me to get interested. So we're not shareholders at the moment in that company.
Okay, that's an interesting observation. So you will wait for some more time to see concrete evidence of pickup in Infosys. But let's get back to pharma. You were telling us that, you know, you like that space. Sun Pharma came out with a big earnings downgrade, and yesterday Lupin also missed street estimates, besides admitting to some FDA observations. Which are the pharma companies that you like?
So again, just to disclose to you, we are shareholders in Lupin. We're not shareholders in Sun Pharma. I think it's fair to say that both companies are pretty well managed. We marginally prefer Lupin because we think that the pipeline is better. We also think that it's got more growth opportunities than Sun, but I think Sun's a good company as well. We also own shares in Glenmark, which, as you know, have done very well. And again, last year, people were saying to me, why are you holding on to Glenmark? It's a pedestrian growth company. No, it's a pretty well-run company with good opportunities. So again, I like the pharmaceutical sector. You know, we own Lupin and Glenmark. And these, in my opinion, are just temporary setbacks on the journey, like we have temporary setbacks in the bureaucracy and the political on reform.
Yes, that's true. Well, let me come to the, you know, probably the evergreen sector, auto sector. You know, Bajaj disappointed yesterday with its numbers, but Maruti is continuing to garner good sales. Ashok Leyland has been touching, I think, new highs practically every day. Your pick of the pack?
You know, I think that sector is a difficult one to make money on a long-term basis for a couple of reasons. I think, unlike the two sectors we talked about, the pharma sector and the IT sector, you can genuinely say that Indian companies and those two sectors are world-class and will continue to take global market share. Now, obviously, with the sectors that you've mentioned, you know, two-wheelers and four-wheelers, although obviously India is a huge market, the competitive threat, both from domestic as well as international, is very, very high. And so, you know, we struggle to find, you know, great long-term value in some of these names. I mean, we've been in and out of Bajaj from time to time, and indeed Maruti, you know, for 1 to 2 years. But, you know, if you want to say, you know, ask me, you know, would I invest on those companies on a 5 to 10 year basis with complete conviction? I have to say no, I'm afraid.
Okay, so now the FMCG space. HUL and Asian Paints both showed slower sales and worries about the low rural demand. Do you think this is the time to buy into these companies?
Yes, we do. I mean, we do like the consumer stocks. I mean, I think the problem with the consumer stocks, and this is partly due to the sort of question you had right at the beginning, is in terms of valuation. You know, many of these companies like Asian Paints, Hindustan Lever, are great companies, well managed, and demand is good. The problem is, at some point, even if the earnings are actually okay, the stock doesn't do anymore because the valuation is which is extreme. And we would like ITC. We've been shareholders in ITC for a number of years. That creates for us an opportunity because obviously the government recently has been targeting ITC, in terms of the increasing taxes. What I don't understand about it is why they're focusing on the branded cigarette sector and not focusing on the unbranded and the BDs, etc., which are killing more people than the branded sectors. But anyway, that's a different issue. But obviously volumes for ITC have fallen this year as a result of this. But ultimately, I'm afraid, whether you like it or not from a moral perspective, cigarette consumption in India will continue to grow, and ITC are very well positioned. So that's our favourite stock in that sector.
Oh, and so will liquor consumption. So do you like United Spirits, despite all the problems that stock has from promoters and governments?
Yeah, it's one of the consistent themes I think you hear from me, is not only do we like companies who we believe are well managed, like ITC or TCS or HDFC Bank, but we also like companies which have consistently delivered. The problem we have in the spirits sector, we look back and we say actually they've delivered one quarter and then they've disappointed the next 5 quarters and etc. Unfortunately, old people like me who've invested in India for a long time have got a lot of history. And one of the advantages of being old is I do remember when companies have disappointed, 10 years ago, and I'm concerned about those.
Okay, you have gracefully accepted your age, but Reliance Industries is a stock that everyone is talking about today. It announces its numbers. This is a stock that did nothing for 5 years, but has done a lot in the past 10 weeks. Is it time to buy Reliance for you?
I think on Reliance, you probably hit the nail on the head. It's underperformed for 10 years, and it's done well for the last 5 weeks. I think you've probably answered the question for me. I'd rather have companies the other way around, actually, to be absolutely honest. I'd rather have companies which have outperformed for 10 years and underperformed for 5 weeks. I think Reliance does operate in very difficult cyclical markets. The company's a pretty well-managed company. But it's really not one for us, and simply the reason for us it's not one for it operates in very difficult cyclical sectors where pricing power in some cases is difficult, input costs. There's too many moving parts. I'm a pretty simple person. If I can analyse 3 things, that's enough for me. When I try and analyse 30 things, I just can't do it, I'm afraid.
Okay, well, we have to state our disclosure. Reliance owns the company that owns the channel you're watching. Let me shift to the other things that can move the Nifty. L&T and BHEL, there are some signs that capex cycle is turning. You like these stocks?
Yeah, I think, I think L&T, L&T again is a pretty well-managed company. If I had to have exposure, which I don't at the moment, to the capital goods sector, I think L&T would be the pick. Again, the problem with L&T is, even though they've diversified pretty well themselves into the private sector as well, they do rely for a certain amount of their business from the government and from the states. And again, I can't forecast what's going to happen there. And so that's a bit of a tricky one.
And now on to financials. They form 30% of the index. You like any part of this sector?
Well, our long-term core holding, which will probably hold well past the time that I leave this business, is HDFC Bank. Again, the stock has been pretty good this year. That's a good company which, again, continues to deliver. That's recognised by the stock market, even though the valuation... 10 years ago, I was told HDFC Bank is far too expensive. You don't want to own this company. I ignored and look at the share price. Look at the compound return. They are doing fantastic things on the mobile payments and the IT side. I would say that their technology, in terms of what they're doing as far as their consumers, is as good as anything in the Western world. If I can get a loan by simply showing my smartphone, I can't do that in the UK. And I think with HDFC's IT platform, I think you can basically do that now. So, that's our call holding the sector. We like it. We like some other companies in the sector like ICICI Bank and Yes Bank as well, who I think were pretty well run. They've had some problems, particularly ICICI Bank, in terms of their NPLs, etc. But those are the 3 names that, which are our biggest positions in in the portfolios.
I think Aditya Puri is going to appoint you as his brand ambassador, Jeff. Well, finally, a blank check kind of question. Do you like any of the mid-caps? I mean, Voltas, Hitachi, Crompton, so many things fly. Any great Indian mid-cap story?
I think on the mid-caps, we quite like Bata. Bata's got an excellent name. Obviously, the products are very good. Most of us have had a Bata shoe in our life throughout. They had some problems last year with implementation of a new IT system through SAP. My recommendation to every company is before you introduce SAP, be very, very careful, because companies around the world seem to have implementation problems. It looks as though they've sort of gone back to their old system now, IT system. But it's a company which doesn't have any real fundamental problems. Obviously, online is a bit of a challenge for them now. So that's a mid-cap which has kind of fallen a little bit on hard times. Got a good product, good brand, good management team. You know, I think it's quite a good investment for the next 3 to 5 years.
Okay, invest into stocks that you own and companies that you would wear. Okay, that's an interesting maxim. Thanks, Jeff, for joining us and giving us your views on a whole host of stocks and basically just telling us about the markets. A bullish